Safir Anand joins in on the show as well to join in into the celebration. Safir, hi, morning. Great to have you on the show. How does it feel? What a resounding victory and, clearly hinting of a continuation perhaps in 2024 as well. Markets clearly liking that.
Good morning and thank you for having me over. As you can see from the color of my shirt, it's in the pink of health, the market and the economy and the government. So everything looks quite cheerful as of now.
Yes, it sure does. Looking like a wow, as elegant. We couldn't have asked for anything better. But Safir, what's the strategy now? You have to be fully invested. Do you take some profits off the table, keep some powder dry? Because fact of the matter is there is still a very big impending 2024 election.
See, first of all, at a personal level, I'm fully invested. Secondly, that does not mean that I don't take profits off the table, because in a portfolio, you could always be doing some level of shuffling, particularly if you sense there's some exuberance in the market that you would not like to participate in. And then you will look at value in other sectors where you think that there could be a catch up. So there is a little bit of shuffle that always happens in a portfolio. And I would have done effectively the same. But from an investment perspective, I'm fully invested. I had actually made a 13-pointer for you on why I think the market should continue to be bullish for 2024. Those 13 points are as follows. First of all is the GDP data, which has now caused even the rating agencies to upgrade their estimates for India. It was far ahead of expectations. The second is the turnaround that is happening in many PSUs. I heard our petroleum minister speak about 50,000 crores profit in BPCL. And there has been so much of skepticism around owning of these companies because they've not seen as profitable companies and more of dividend plays. But that's completely changing. The third is the GST collections that seem to be more robust and the more adaptability by the economy towards GST, which augurs very well for the listed sector. The fourth is reforms in sectors such as power and infra, because those are technically considered to be more laggards as compared to the consumer and the IT and the healthcare sectors. The fifth is the observations by the Honorable Supreme Court in the Adani case, although the matter is still awaiting judgment. But I just saw a tweet from ET now just a few minutes back that even a US agency has held that the report may not hold much substance, the report of accusations against the Adani group. The sixth is the reforms made by SEBI. For example, it is unprecedented that you apply for an IPO and you get a allotment within 1 day and you have a listing within 2 or 3 days. So the money unlocking the money is never locked, and therefore the money unlocking process and the level of transparency is very high. There are also very good amendments that have happened on the bond side, and that is causing an interest on that sector as well. The next is the general fact that the retailers are making money across all segments. They're not limited only to equity. Gold is doing exceptionally well. Bitcoins are doing fine. Housing is doing very well. So generally there is wealth creation across sectors, which will generally cause greater interest in asset classes, of which equity will also be a part, because you could have a diversified portfolio. The next is the return of FIs, and I think that is going to be a big catalyst for the market. Many people make a statement that the retail is the only element in the market that matters. Retail has caused us to reach where we are. FIs will cause us to move ahead from where we are, because they will now, there's likely to be participation, particularly in the large cap names, which is what the market is seeing in the last week or. The next is that, there are certain pockets of valuation. For example, PSU banks still trade at 1 times book value, and yet they're reporting very robust numbers. Even the private sector banks are now quoting at less than the historical valuation price to book. So there are pockets of market that seem to be of interest. The next is the role of RBI, which has been way ahead of banks all over the world. The entire world banking sector seems to be in a crisis, and RBI seems to be in complete control. And the kind of worries they have on the inflation front means that they will look at problems. I personally also feel that the interest rate hikes will not happen, and that could be a big positive. The next is the upgrades by the rating agencies, which typically do not like to upgrade India, irrespective of the fact that Indian economy does so well, but they have increased at least the estimates for India. The inclusion of Indian bonds, which generally means that the feel-good factor for India has improved at a macro level. India's contribution vis-a-vis MSCI also has significantly improved. It used to be some 8% and it is now moved up to, I think, something close to almost double or more than that. And generally, the fact that there is so much of liquidity in the market, which is extremely comforting for an investor, because liquidity in the market is the main criteria for investing. If I need the money, I should be able to sell a stock and get the money. And today, that money comes to me in a matter of seconds. And you can see so many block deals are happening, and those block deals are getting absorbed in a matter of hardly a few minutes. So these, according to me, are factors that should sustain the bull market at least for 2024. And the last factor, the stability of the government, which is a very, very critical thing. I've kept it for the last because it is one of the critical factors. I personally feel that the stability of the government will cause them to be able to pass more bills in the parliament and therefore concentrate on long-term benefits for the economy rather than be fixated by a worry on what is going to happen in the general elections.
Okay. How did you manage to remember 13 points?
He jotted them down.
I have to remember what I'm doing.
No, by 13 points, man. I mean, I've been doing television anchoring for years now. I'll not even remember.
It's also the passion of remembering what you like.
Okay.
And the passion for markets.
Yes.
I mean, you're comparing FI to HNI.
Yeah, true.
कुछ तो difference
है. अच्छा, 13 point की जल्दी stock list बना दो चलो. वो फटाफट.
See, the thing is that
नहीं वो तो लिस्ट तो बताओ भैया तो याद होगी जब पॉइंट्स याद है स्टॉक लिस्ट तो 26 27 जो भी हो तो पक्का याद होगी चलो आई गॉट अ पेन एंड अ पेपर लिखना है चलो फटाफट टिकर गेट रेडी विल फ्लैश
I will tell you that, but my point is whenever you have been kind enough to invite me on your show and whatever stocks we are speaking, they end up doing well. So the question is that do you penalize something that is doing well? And I don't mean well in terms of stock performance, I also mean well in terms of earnings. I think many of the stocks have been re-rated 4 to 5 times, and therefore there is technically no reason for you to sort of get out because still after getting re-rated, they are within the realm of reasonable valuation commensurate to their growth. But the sector that appears to be very well positioned continues to be banks and the PSU sector. I think that positions in the banking sector and the PSU sector seem to be rewarding very well. I just gave you an example of the kind of profits that are expected out of BPCL as an example. The spending on infrastructure is so large, and you're not hearing the stories of problems in terms of payment or defaults. In fact, more work is moving towards the organized sector because the scalability of the projects is going up and they are able to execute in a much better way. So, within the same pockets, whatever you want to own or whatever basket you want to own is working the best for you.
Okay. So let's make a list of 2 or 3 buckets. Stocks which you think can be classic compounders from here. It's like that old Hero Honda ad, fill it, shut it, forget it. So buy it, keep it and forget about it. Classic compounders. Doesn't matter what happens in May 2024, does not matter what happens to Fed. You're happy to own them for 5, 6, 7 years. Second, stocks where you think it's time now to perhaps have a tactical trade, which is that either they're on the cusp of a market share gain or perhaps the sector could do well like OMC. They're the cusp of a profit curve now. And third, stocks which you think that they are pure concept stocks. I mean, they could do well, they may not do well, but if that theme becomes big, for example, food delivery was a concept few years ago, it has translated into reality. Defense was a concept post-COVID, but it has translated into reality. So 3 buckets.
So banking would, for example, be in bucket 1, and in banking, I would now, historically, I've been for the last few years in favor of PSU banks, but I now believe that it is also time to look at some of the private sector banks. In the private sector banks, I have owned and spoken about banks like ICICI, and many of these stocks have done exceptionally well. But now I also feel that some of the more obvious names, such as an HDFC Bank, may have a greater traction from here, considering the impact of many of the 13 factors that I spoke about. I also believe defense is in a long-term play, and while defense may see corrections because somebody or the other may come and book profits, there will also be an equal number of buyers. And a lot of people talk about the price to earning ratio in defense companies as having run up too much. I actually believe that the sector is going from a complete substitution of import into a make in India sort of feeling. And the third would be pockets of manufacturing, because the capex cycle has just started. The private capex cycle has just started. So I feel that the cycle doesn't start and end in a matter of 6 6 months, and therefore there could be large ticket benefits there. Now, they could be in the second pocket that you're talking about, like you referred to OMCs. Right now, I'm buying selectively, or I have bought selectively PSU stocks and I'm not talking about banking, but non-banking PSU stocks, because I do believe that there's a sort of a good wind in place. There could be engineering companies, there could be infra companies, there could be pockets even like private sector infra companies, like a more mature name like Larsen and Toubro. There are pockets where the market, behaves very strangely. For example, last few days, iShares got dropped because of the fact that there was a Harley Davidson launch. But actually, I believe that Siddharth Lal is not a guy who sits quietly, and he will not, he avoided media during that time. But you obviously can anticipate that something must be in his mind. The market is now looking at Himalaya, but I'm also very interested in what he does on the Volvo side, which for now should be a business that should pick up, particularly with the kind of changes that have happened on the road front. There will similarly be problems. For example, even in a company like Hero Motocorp, if you saw that there was an ED action and there was a huge reaction on the stock, but then you come back into basics of how many motorcycles are being sold and what is the business potential, and you look at those kind of stocks. Some of these stocks have moved up 20% odd for the month. So, you will get opportunities there. There are good companies going sometimes through bad cycles, and you can look at some of the opportunities. And the third pocket to me are right now this small caps, where there seems to be certain pockets of exuberance. There are, for example, small cap companies which people talk about on social media in terms of the kind of returns that they have given, ignoring the fact that nobody talks about their business. Nobody actually knows their business. It's just that you look at an EPS and multiply it by a certain factor and say that they are very good and they are in trend and they are going above DMAs and etc. But when you go to the real market, which is not the stock market, but in the real market, you really don't know anything about these companies. And many of them resort to QIPs and other fancy forms because that's the history of the market, that the promoter knows when to sell. So those are the pockets that I would typically avoid. I'm also generally avoiding the consumer sector right now until I find that the inflation in rural India is more under control, and also rural India shows greater traction towards growth, which is very evident in the housing and infra sectors, but not so evident on the consumer side. So those are the pockets where particularly you asked me three, I've given four. So I've tried to justify one more for you.
Okay, what about power? There is enough, and I mean, this was a sector which was considered to be ugly duckling, low return on equity, always dependent on government policies. There was no clear, coherent arrangement for most of the private sector companies. But today, power stocks are going higher as if there is no tomorrow. Do you think there is a froth in power as a theme, as a category?
No, so Nikul bhai, you have been in the market and you've been a veteran for so many years and you analyze the market in so many ways. If I believe the fact that there could be exuberance, first of all, I have participated in it, so there are profits. But if I believe that there's exuberance, it's like the mining story that happened in California. So you don't own the mines, but you own the companies that enable the extraction. So technically, if you look at the power sector, it causes an indirect benefit on cables and wires and segments of that sort. Even the pump sector, because the pumps are also required, if power, the ability to extract goes up. Pumps are used in mining, they're used in construction, they're used at housing level, etc. So you can look at some of the indirect beneficiaries of that. And then there could be pockets, for example, some of the public sector companies, anyway, they come in my PSU bracket, have done exceptionally well. But there have also been pockets such as Adani Power, which is one of my top holdings. And I think Adani Power had come down to maybe about 175 odd rupees. And then I was hearing all the good statements coming from one of its largest investors, which is the GQC group. And, you could basically look at that and you come and say that if the reforms happen, and you're also trying to see what is the diversity in the power company. For example, are they only dependent upon power, or they do solar and they do wind and they do other things? The last time when I came on your show, I spoke about Suzlon. Now, many people drub it as a bad company for historic reasons, but they do not see the management change. There's a change in government policy and the valuations then become attractive and the QIP gets mopped up immediately. I participated at the same time. Now, those are the kind of reforms, but like they would probably go in bracket 3, which is that you're playing the trend for now. And if the trend continues, the bracket 3 could move into bracket 2. But if the trend does not continue, or for example, the valuation goes way above your head, then you will say that I don't mind taking profits because historically they've not been wealth creators. But I'm also not as rigid as I used to be. Like, for example, I may dislike a company, then there may be changes in the company, and I may like the company, and I keep telling myself that that's how you evolve as a thinker.
So, Safir, are you going to repeat after me, or will it be a solo? So beautiful, so elegant. Come on. I'm sure you've said that many a times off cam.
Well, we all as a country are so beautiful, so elegant, and just like a wow right now. So I'll toast to each one of us.
Great. On that note, Safir, stay elegant and stay like a wow forever. We'll take a very quick break and we'll, of course, let you go on that note.